Good day, everybody. Welcome back. Hope you're all having a great day and that you are all doing well. I'm going to be going a bit slower in this video. I'm a bit worn out, so I'm not going to really blaze through this one. So feel free if you wish to speed this up, if you wish to hear me at more of my normal speed. To start things up, Christopher Mata, who is the co-founder of Crescent Crypto Asset Management and former vice president at Goldman Sachs Investment Management Division, claimed in his debut on CNBC's Fast Money that it is safer to hold a variety of altcoins rather than Bitcoin, since this diversity would offer better risk-adjusted returns. The Crypto 20 Private Index Fund is an index fund that invests in 20 of the most liquid cryptocurrencies which command the greatest market cap. When asked about how the variety of altcoins should be chosen and whether it is market cap based and will change over time, Mata answers that the coins which suddenly explode in value must really retain their position to prove themselves as true investments. The Crescent Crypto Asset Management Majors portfolio holdings are Bitcoin, Ethereum, Ripple, and Bitcoin Cash. Liquidity is another factor to consider when choosing a coin to invest in. It must be available for trade on multiple cryptocurrency exchange platforms. Also, Crescent really looks at the issue of custody. They will not hold any currency that cannot be held in cold storage. This is for security measures, as exchanges being hacked is bad news for everyone involved, and that's been happening a lot more lately. A lot of people are trying to move the crypto world to decentralized exchanges or DAXs or DEXs, however you want to call them, because it's becoming a major problem. I mean, it was always a problem, but if you continue to get hacked, a lot of people aren't going to want to invest in cryptocurrencies because they then have no place where they believe that their money will be safe. Mata will absolutely, he said, put his mother's money into this crypto asset class. He said he believes the risk-adjusted return is very good compared to other asset classes, despite the market being quite volatile at this moment. He said you might get 10x over the next 5 years. I'm pretty certain you'll probably get a lot more than 10x usually. Don't hold me to this. Typically, we get around 15 to 20x every single year, depending on what you've had your money in. Like I've said this many times before, Ethereum was $8 last year, and then it shot up to $1,200. Ripple was less than a cent. It went to $360. Bitcoin was at $900 and shot up to $20,000. So we typically make a bit more than 10x. But yeah, there are a lot of people, I've said this many times before, and I know a lot of people don't like when I say this, but there seems to be a moving away from Bitcoin. I read an article, and it was also like a podcast, I can't remember exactly which one because I listened to so many, where they were saying that they believe that there is almost like a shift away from Bitcoin because, like I said before, not everyone has 6,500 or whatever the price of Bitcoin is right now to invest in an entire Bitcoin, but they do maybe have, 300 or 400 where they can buy a couple of Litecoin, they can buy some Ripple, they can buy a huge load of Cardano. So it seems like a shift is happening, even if a lot of people don't want to believe it. But the issue is, as we all know, Bitcoin controls the market. So if people lose interest in Bitcoin, what then happens to the rest of our money? Next up, there's a lot of news about the Bitcoin futures, which I'll get to, I think, in this part and another part of the video. Little bit concerning, if you will. So it starts off, yet further concerns surrounding the impact of Tether or USDT and Bitcoin futures on the leading cryptocurrencies' fortunes were raised on CNBC. As CNBC notes, Bitcoin futures have sunk 55% this year, reaching their lowest levels since February. Weighing in on the controversy surrounding allegations that Tether is being used as a shorting mechanism by institutional players on the Bitcoin futures markets, Brian Stutland, who is the CIO of Equity Armor Investments, dismissed the idea as far-fetched, saying, he said, I know there's a lot of talk out there about Bitcoin's price manipulation by some professor who has probably never traded any significant money. It's kind of condescending. If people were producing Tether to go ahead and then buy Bitcoin, then it seems to me that Tether should go to zero and not Bitcoin. Stutland's mention of some professor refers to a paper released June 13th by John M. Griffin and Eamon Shams of the University of Texas, which suggested that transaction patterns suggest Tether was used to provide price support and manipulate cryptocurrency prices, artificially deflating the price of Bitcoin to maximize short-term returns on future contracts. We spoke about this a couple of days ago. And it looks like it's starting to gain steam because we saw the chart where every time Bitcoin was going down, more Tether was produced. And this Tether was then used to buy Bitcoin. Bitcoin's price started going up. And then after the high, if you will, of Tether being printed after about a week and the Bitcoin price going up had slowly subsided and Bitcoin's price went back down, more Tether was then printed. And the fact that we have 2.5 billion or more Tether now and there's no explanation for it, this seems to be a major issue, if you will. So Stutland proposed a different explanation for Bitcoin's declining futures in 2018, saying that the low volatility in stock markets the coming quarter means that people would rather be invested in the stock market than Bitcoin. Bitcoin trading to the $6,000 level seems where it wants to go. I am going to heavily disagree. I don't think anyone this is just how I personally feel. Before I got into cryptocurrencies, I was heavily into the stock market. Well, not as heavily as crypto, but I loved the stock market. I loved mutual funds. I loved, dividends and all these other things. After about a year, you get around 3, 4, 5, 6% return in cryptocurrencies. Even on like a bad month of prices going up, you get around 19 to 38, 40%. So I think that's a lie, and I don't want to say he's involved with Tether. I don't know this guy. I can't throw him under the bus like that, but this is whatever. Anyway, the case is adamantly disagreeing with Stutland's perspective. Scott Nations, who is the CIO of Nation Shares, reposted, "The situation is absolutely toxic. Professor Griffin has a history of rooting out fraud manipulation. That is not something you can dismiss. Tether was fired by its accountants in January. You do not get fired by your accountant because you're too upstanding. If Tether is the only reason that Bitcoin is at $6,000, then I think we'll see it down much more than the 3% it's down right now. 3% would be a victory. I'd expect it to go down by 10. I was listening, not to make everyone worried. There was an analyst on a podcast. It wasn't unconfirmed. I don't remember which one it was. I'm sorry that I always say that I listen to a podcast but never know which podcast I was listening to. On my daily walks, I literally listen to about 7 of them, so they get jumbled up. And he was saying that him and his other analysts, they were looking through the prices and they said, there's a fear right now that Bitcoin could continue to go down in price to around potentially $3,000 because it is, they believe that the big snapback or the price going back up will be anywhere around this mark, because this is currently around how much it costs to mine a Bitcoin, depending on which country you're in. I think in South America, it's $1,800 or something like that because they have cheaper electricity, but other places around the world, it costs around $6,000. So the fear is that if Bitcoin's price continues to go lower, miners will stop mining. Certain parts of the world will continue to do this, but at a certain point, if it continues to go much lower, everyone's going to turn off their machines, and then we will have no choice but to buy Bitcoin, or it'll completely be decimated. But there's a lot of talk around the future, specifically manipulating Bitcoin's prices. It's all kind of, this is, to be fair, this is literally about the 5th or 6th thing that we've heard that's manipulating prices. We heard countries, we'd heard futures, we heard Tether, we heard, what else was there? There was a whole slew of things. I think it could be a complete mix of all these things. One possibly more than the other. But I think, or hope, that eventually we figure it out, because I think the market is going to have a hard time moving forward, at least in the near future, if there's nothing but controversy surrounding our market and what we do. I think, it's going to be hard for trillions of dollars to come into our market if the word manipulation appears on every 5th news story. Yeah, see, here we go again. Well, kind of. You'll see. So at the recent Money Conference 2018 in Dublin, there was a little talk with John, who is the COO and co-founder of instant digital asset exchange Shapeshift, where pretty much they spoke about the future of Bitcoin, the past of Bitcoin, what happened to the exchange, and I'll start from here without going through exactly what Shapeshift is. The guy said the exchange was hacked by a rogue employee 2 years ago, with 315 Bitcoins being removed from the hot wallet, which by necessity is kept stocked up. Notably, no customer funds were lost during the hack, which John feels demonstrated the security of their model from a customer's perspective. He said, I think we're still probably the only exchange that's been hacked, lost money, and not lost a cent of customer funds. The project relocated from the United States to Switzerland after hostile federal regulation made the local climate inhospitable. In New York and Washington, BitLicense and Bill 5031 introduced regulations requiring the exchange to hand over customer information and trading data, as well as increasing licensing costs. Shapeshift, along with many other exchanges, currently does not cater to those to states due to regulatory restrictions. John spoke out against the harsh regulatory environment in the U.S. I said a day or two ago, not even just the U.S., New York, and I've never lived in Washington, but I know New York is a doozy for everything. And it's very odd because there's tons of millionaires and billionaires who live in New York, but it's completely inhospitable, especially if someone new is trying to take over, because there's a bit of a monopoly on who can make money in the city, if you want to believe that or not. He said, I would say in the US, it's actually gotten worse, especially in the last 6 months. I think explosion of value in 2017 brought a lot of these regulators into the space and made them more concerned. Most of them don't understand what the heck cryptocurrency is, but they want to control it. They don't give clarity. All these companies and lawyers and lobbyists are left to read the regulatory tea leaves. Nobody knows what the rules are, and everybody's just left to figure it out. That's a dangerous place to be. This is one of my major frustrations. And I've noted this a couple times before. I'm sure you've heard me say this. The problem is that there are so many other countries who have come forward and told us exactly what cryptocurrencies are, even if it's digital rights, like something in Canada. There are, over the last 6-7 months, why is it that every other country that was close to banning cryptocurrencies, we're not allowing it, we're not allowing trading, they've all drafted some type of law or something to tell us exactly what cryptocurrencies are, and everyone knows that they're waiting for the US, and for some reason the US they drop little hints or tell us, that Ethereum is not a security, but they don't explain why. They don't give us like an actual rundown of everything that's happening. They know exactly what they want to do in this space, what they plan on trying to control, and I besides taxes, I think it comes down to they're looking for, I am certain that they're looking for ways to try and strangle the entire market as much as they can to figure out exactly how much of it that they can control. There was someone talking about this before. They said what's dangerous right now is that on the topic of manipulation, you have to also understand that there are a lot of my belief is that rich people know rich people. That's just how it is. They usually live in their own little bubbles. If you have a marketplace that's not regulated and there's no regulations on top of it yet, except for when it comes to cryptocurrency exchanges, all these people, like I said, know each other, and I'm pretty sure there's some type of inner working somewhere, I don't know what country it's in, where they're purposely pushing the price down and are manipulating the markets because it's not illegal. If there were laws against this already, I think we would have definitely seen something stop or something go against it. But I think that a lot of people, especially rich people, are taking advantage of how deregulated the space is right now. There was news it had to be a week and a half ago, about the guy who was working for someone in Dubai who I think he accumulated like 30,000 Bitcoin or something like that since January. So they're definitely taking advantage of it. And I don't know if there's some type of, I don't want to say collusion. I don't know. I can't get too deep into any type of conspiracy theories, but you understand what I'm saying. It's all kind of weird. Why is it that every other place in the entire world has given us clarification? It took like an outburst from some guy at a meeting to tell us that Ethereum is not a security. They know what the other coins are, and I'm actually going to get to that and later on in the video as well. John continued and described the New York Attorney General's demands issued to 12 exchanges in April as tone deaf and unproductive, but said that perhaps other exchanges could help turn things around at home. He said, I do hope that more and more of the crypto exchanges do band together to help educate the regulators in the space and try to work together to do something productive. John pointed out that decentralized exchanges were one of the ways the crypto community is putting pressure on the regulators as well, stating that while they are currently slow and face low liquidity, that situation is likely to improve in the future and offer people a more viable alternative to regulated centralized exchanges. One of the reasons why I like EOS, and then I've spoken about it before, one of the major things that's supposed to launch on it is a decentralized exchange. We've seen decentralized exchanges not fare well in the past. I think one or two of them, I want to say the ones that were on Ethereum, possibly Neo, not exactly sure, were hacked in the past, but obviously, with time, they build up infrastructure. My belief is if more people were willing or knew more about decentralized exchanges, or if they were slightly stronger, I think regulators would start to scramble to figure out a way to control it. But at this point, we would be almost completely in control of our money. The only reason why we have these regulations, or why regulations are being planned, is they're being planned against exchanges. I said this before. You can't stop someone. I can't be stopped from sending you a Bitcoin in the same way, vice versa, if we're sending it over the actual blockchain and through our wallets, unless you unplug the entire internet of the world. But you can stop the exchanges from doing what they want to do. If we had bigger decentralized exchanges and or more of them, which we eventually will over the next year and a half, and everyone just switched to decentralized exchanges, this will cause a huge shift. And I think this is when we will start hearing a lot of countries talking about banning cryptocurrencies. This is just my belief. Because once we have the power on our computers, and once we're able to use decentralized exchanges to transfer value back and forth or swap between coins, especially when we have atomic swaps, I think this will be a huge shift. And this is when I think we'll start to hear a lot of chatter, especially in the US, about actually banning cryptocurrencies. This is just my belief. I'm sure you understand where I'm coming from with this, but I wish the US would kind of get it together. But like I said, this is why the entire Ethereum thing was so surprising, because we were told 9 months away, and then kind of fell out of nowhere. Not to spend too much time on this, but let's continue. Ripple is in the news today, kind of, more or less. Ripple is reportedly unfazed by the Indian central bank's mandate on restricting banks from dealing with cryptocurrencies, and expects a new regulatory framework to rescind the ban altogether. India's biggest English news daily, the Times of India, or the TOI, is reporting that crypto and fintech industry giant Ripple is betting on Basel III norms, or international regulations for the banking sector, and a government panel report on cryptocurrencies leading to a new regulatory framework for the sector in the country. Ripple, which notably has a presence in the city of Mumbai, also expects the Royal Bank of India to rescind its current ban forbidding banks and regulated financial institutions from offering services to cryptocurrency businesses in the country. India's central bank admitted to not conducting any research or consultations prior to enforcing its crypto ban in April, and a recent report has suggested that a government panel tasked to look into cryptocurrency policy may seek a reversal of the ban. Citing Ripple's global head of infrastructure innovation, Dilip Rao, Friday's TOI, or Times of India, report suggests that the firm is looking to aid international and domestic remittance of fiat currencies rather than seeking to replace them, a factor that would seemingly make it more favorable among authorities than decentralized state adverse cryptocurrencies like Bitcoin. I mean, say what you will about Ripple. The team, not the token. They do what they can. I think you can disagree with me as much as you wish. Free world in many countries. Ripple has taken the initiative where other coins have decided to, completely push away governments and stuff like that, and or push back at them and say no to them. Ripple, while they want to mainly work with banks or financial institutions, I think they have played their part in spreading the word of crypto. Like I said, you can disagree with me. When it comes to things like this, they have given, what's it called? Where they've spoken before Parliament and governments and stuff like that. They've done it in India. They've done it in the UK. They did it in mainland Europe as well, I believe. I think they have a branch, if I'm not mistaken, somewhere in Africa. Don't quote me on that. I think they've done it as well in Singapore. There are a lot of countries, and I think if it had not been for them, I think a lot of countries would be a lot more afraid of cryptocurrencies. This is why I think, to a certain extent, you do need a face to what's going on if there was this rampant, super popular thing called cryptocurrencies that was taking the power away from governments, and there was completely no face to it, especially no one knows what Satoshi Nakamoto looks like. I think we would have a lot more countries who would be banning it. But Ripple kind of goes in and almost woos them, if you will, to tell them, things aren't that scary. But I said this before when we spoke about India as well. I think that every country that has said something about a ban, about 5 or 6 of them have come forward saying they're not going to ban it anymore. Only, high net worth individuals can actually get into buying a lot of cryptocurrencies, but they'll allow it to their citizens as long as they, KYC, show us an ID, we know who you are, who's buying it. And I think this is exactly what's going to happen in India. India is going through like a transition right now where they're trying to, if I'm not mistaken, get a lot of people to stop using cash. I think they want to become one of the first countries in the world to become completely digital when it comes to transactions. So I think cryptocurrency will definitely help them with this. But I think if they are unaware of what cryptocurrencies are and they have no idea, what's really going on, I think something like the Ripple team can help them to understand exactly. But this also helps Ripple and the entire cryptocurrency space in the long run. So like I said, say what you will, I do like how they have helped to move the space forward because there is a face to the company. Next up, Bittrex is in the news, and I'm actually quite happy about this, as US crypto exchange Bittrex gears up to allow fiat trading. The company has updated its customers on its phased approach to implementing the change. According to the company blog, the approach is designed to ensure the processes and systems are operating without issues before the system goes live to its clients. Very exciting. The latest phase involves allowing a small group of retail customers to participate in the US dollar markets to enable testing and evaluation. The initial announcement was made on May 31st when the company decided to open fiat trading for corporate customers as part of the first phase. The first markets to be opened were Bitcoin, Tether, and True USD, which is the other stable coin that is trying to compete with Tether. 2 weeks later, the second phase has been implemented to include participants who reside in Washington State, California, New York, and Montana, as well as qualified international regions. The announcement went on to state, "Don't worry, as we roll out future phases, more states will be added. So please continue to be patient as we roll out these phases over time. Also, if you're reading this and you aren't a Bittrex customer yet, you should sign up now to have the opportunity to be included in the US dollar trading in the future." Once all phases have been completed, customers that qualify will have a smooth and streamlined process for buying cryptocurrencies directly using the US dollar. The move places Bittrex in direct competition with Coinbase and may even improve its standing since Coinbase only offers 4 cryptocurrencies, 5 when Ethereum Classic is added. Bittrex has almost 200 cryptocurrencies, and according to the post, we have a deep pool of good candidates to consider for USD trading pairs. To entice new users, the company went on to add, in addition to methodically adding new customers, it probably won't be too much longer before we start adding new US dollar pairs that may only be found on our platform. I'm going to assume that is a shot at Coinbase, as they do not offer a lot of coins. I'm still perplexed. I don't understand why Coinbase is having such a problem. There's so many, not that there's like a plethora of them, but there are other exchanges that are allowed in the US, that are in New York, that are in Washington, that are in Texas, that are in California, that are going to be offering or already offer US dollar pairings, and they have 200 coins. I don't understand Coinbase's philosophy. I understand if it has to do with the entire securities thing, but I don't know how much longer Coinbase is literally going to be able to hold on. I do not use Bittrex. If you use Bittrex, have had a very good experience with them. Please tell everyone in the comment section below that you have used them, that you like them, your experience with trading, if you have done it as well. This is very important because I know a lot of people have become frustrated when it comes to looking for an exchange that they can use the US dollar on, especially when it comes to Coinbase and their fees, which many people are not happy about. But this is very good moving forward. There's so many companies that are coming out. This is why I keep saying there's so many companies that are coming out that are allowing US dollar trading pairs. And when we get news about that, the market doesn't move, but Coinbase sneezes on Ethereum Classic and the price goes up by 25%. It just doesn't really make a lot of sense. But very good for Bittrex. I hope we have a lot more news like this in the near future of other companies who are adding trading pairs. This is why the entire Binance thing is very significant, because they're going to be adding at least Euro pairings in the very near future. It's going to allow people to add so much money or more money into the market, because as of right now, we have very few options. If you want to buy something quickly, especially in your local currency, it takes a long time. You have to buy Bitcoin. You have to wait 4 or 5 days to get the Bitcoin, and you have to transfer that Bitcoin into the altcoin. And then by that point, the price of what you wanted to buy is no longer where it was before. Next up, Thomas Lee is in the news once again. He's like twice a week. This guy's in the news. According to Fundstrat head of research Thomas Lee, the recent decline in Bitcoin price is likely the result of the expiration of Bitcoin futures. This is why I said it would tie in to around here. In a report, Lee explained that the gut-wrenching weakness in Bitcoin, which dropped upwards of 20% earlier this week, was the result of future contracts expiring. Lee said that significant volatility is one of 6 expirations of Bitcoin that have happened since CBOE launched its futures contract in December of 2017. Lee wrote, Bitcoin sees dramatic price changes around CBOE future expirations. We compiled some of the data, and this indeed seems to be true. According to Lee, Bitcoin usually sees a drop of around 18% in 10 days before futures expiration, with prices generally recovering by 6 days afterward. Lee explained that if a trader is long on Bitcoin and short the futures, holders may sell large shares of Bitcoin at the volume-weighted average price as contracts move closer to expiring. Near expiration, however, they may sell the remaining Bitcoin, which causes the price to drop, and leaving the short position in the futures, they close with a handsome profit. Lee also noted a low amount of investment in crypto markets this year, claiming that there's more net supply this year amid ICOs, mining rewards, and capital gains taxes. Crypto markets saw a slight rebound today. This is about a day or two ago. I don't have to read that. Remember when, it's not funny at all. Remember when we were reading about I don't know this guy's name, the older gentleman who stated that he planned on taming Bitcoin and they were going to do it with Bitcoin futures? It looks like they really might have done it. It may be perfectly timed at this point to whenever that Bitcoin could possibly go up. You know, it might be then shut back down, because all you have to do, for some reason, a lot of people, I didn't expect this at all. A lot of people are actually focusing on the Bitcoin futures price. And depending on if they have shorted it and the price is lower than where we are right now, people begin to sell because they think for some reason that this dictates the price of where Bitcoin should be. Don't know what's going to happen, guys. I mean, I said I try not to be pessimistic, but I also try to be realistic, and I'm not here to lie to anyone. I'm not here to give you like just jolly, happy news. Because should the market start going down, everyone's like, we've only had good news. What's going on? I don't know if there is a clear solution to all of this, because if Bitcoin is controlling the market and the Bitcoin price is controlled by people manipulating it, by the Bitcoin futures, where does this kind of leave the rest of us? Because the futures didn't get started until last winter. It was November, December. And the end of December, beginning of January is when we first started seeing the Bitcoin price going down, because it was the expiration of the first futures contract. So everything is kind of tying into the Bitcoin futures. It's kind of, I still wonder, and I'm sure you all do as well, exactly where the price of Bitcoin would be if we had never had futures. Tether aside and anything else, I think we would have a completely different market. I think Bitcoin would be around $35,000 simply based on hype and the 20,000 price that we hit, because even when we hit 20,000, it looked like it was going back up. Since the futures has ended multiple times, and the talk of manipulation and all these other things, and I don't know, I feel like we could be a lot higher, and I don't think that Bitcoin futures will stop anytime soon, if you know what I want to, what I'm trying to say. People who are doing Bitcoin futures, they're not going to suddenly stop dealing in futures that is making them possibly six figures to help normal people out. Like I said, I don't see the solution for this. I'm hoping at some point, the podcast I was listening to earlier when the guy was saying that the Bitcoin price could possibly go down to 3,000, he said the rainbow at the end of the tunnel is that possibly by 2020, when Bitcoin's reward gets cut in half, we could see a $100,000 Bitcoin. And the guy who was the host was like, so we have to wait 2 years to see 100,000. He's like, potentially. And for some reason, the guy was unfazed. I don't know what he was doing. I assume he's making other money on the side. Kind of worrying. I don't know exactly what's going to happen. Time of me making this video, prices are slightly down. I guess it's because of the weekend. Who knows? But you would assume that the hype around Bitcoin or Ethereum not being labeled as a security would have, still have a bit more flair to it. To finish things off, this is a very intense reading, so don't be upset by the end of it. You'll see exactly what I mean. Kyle Samani, who is a managing partner at cryptocurrency hedge fund Multicoin Capital, believes the majority of the top cryptocurrencies could be considered securities, given SEC Director William Hinsman's statement on Thursday. In a 17-part tweet, Samani discussed the guidelines issued by the SEC on June 14th. Hinman, the head of the SEC's Division of Corporate Finance, was responsible for revealing to the public the agency's stance on cryptocurrencies. Hinman clarified a digital asset by itself cannot be considered a security. However, depending on how its creators decide to handle advertising and sales, it can become a security. Simply put, tokens which depend on an identifiable person or group to succeed will be considered securities, unlike those assets which are truly decentralized and no single entity can control it. Both Samani and Hinman agree Bitcoin and Ethereum are examples of this latter type of digital asset and thus are not securities. In Hinman's exact words, he said, if the network on which the token or coin is to function is sufficiently decentralized where purchasers would no longer reasonably expect a person or group to carry out essential managerial or entrepreneurial efforts, the assets may not represent an investment contract. My thought on this is that the SEC actually declared Ethereum was a security when the ICO first started, but they declared that it is not a security. But what's odd is that Ethereum still has a face. People look towards Vitalik Buterin to literally be their voice when it comes to Ethereum. Usually, for those who do not know, even though there are other co-creators, typically Vitalik's word is sometimes law in the project. Obviously, I was excited when Ethereum was not declared a security, but when you read into it further, this is why there was a discussion around it, because Ethereum does have a face. And this is why I also think, remember when Charlie Lee sold all of his Litecoin? I think someone may have noted to him at a certain point, you either sell your Litecoin or this also could be a security, because when we looked for news about Litecoin, where did you go? You went to Charlie Lee's Twitter, or you listened to news about Litecoin, and who was the person who was always quoted? It was always Charlie Lee. If Charlie Lee made a bad statement that day, the price of Litecoin would go down. The moment he said something good, the price went up. So it kind of makes sense now as to why he sold. Because I'm sure January, February, when we started getting all this news about regulation, I'm certain that Blockstream, the people who control Bitcoin, Vitalik Buterin, Brad Garlinghouse, and every other person, I'm sure even the people behind EOS were all contacted or were told to contact the SEC, and they were told, you're probably a security. And this is, how the entire thing moved forward. This is just my personal belief, because when people have asked Charlie Lee before why he sold his Bitcoin, he gave no reason for it. He said, I don't want to be a major influence on the price. Why would you then sell your coins? Like, you understand what I'm saying? It doesn't really make a lot of sense that you would sell your baby for no apparent reason and then not really give an answer. So it seems that based on all of this going on right here, that this could be a reasonable explanation that someone contacted him. He decided to sell so that he no longer would be able to push the price back and forth. It's just how I kind of feel about it. Hinman also released A list of questions to help distinguish security tokens from a utility. It should first be assessed if the promoters are playing a significant role in the project or if they hold a significant amount of tokens, as in the majority of them. In cases where promoters raise too much money than necessary, it is important to hold the team accountable. If no explanation is given, there should be a red flag raised somewhere. For those who keep up with Ripple, I don't know if I even mentioned this in other videos before, you may have noticed, like I said, the team has notably been moving themselves away from XRP because I have a feeling that they were told by someone that they are a security. To be clear, if you are a security, this doesn't mean that something is wrong with you. Like you're not, you don't have the plague if your coin has, or your coin is a security. It pretty much comes down that the SEC is then able to mandate and kind of say and control what your platform does, and it's kind of the same as holding a stock. You know, you're then under that same regulatory frame. The problem is why a lot of these coins don't want to be considered a security. It has nothing to really do, like I said, being a security isn't anything extremely toxic, but it comes down to back fines. If the team or teams behind all these coins are considered securities and they've been out for 4 or 5 years, you then have to pay a huge amount of fines because you essentially sold stock in a company without the US government knowing. People were asking in the comment section a day or two ago, and I didn't get a chance to respond to everyone. People were saying, why is it so bad to be a security? What is a security? It pretty much comes down to if you're an entity and you sell something and people expect the profit from what you've sold, you are then selling a security, and essentially it's kind of like the same as a stock. You expect money from the stock that you are holding, and this is why I said that I think that Ripple has been moving away. They just, the community as a whole just voted on a new XRP symbol. So this further decentralizes, you know, what the coin is. And they've also made sure to note in a lot of their meetings with the SEC and other regulatory bodies that the coins were actually gifted to them, and they've made sure to note this, and I couldn't figure out why. And this is kind of it. It's pretty much if you create the coin and you hold a large amount of it, then you are then dealing with a security. But what happens if the coin XRP was actually gifted to the Ripple team and they decided to use it on XRapid, which was one of their things, and this is where all the questions are right now. So, but anyway, moving forward, he said, Samani points out, sufficiently decentralized isn't a quantifiable measurement and could lead to ambiguity. Hinman's words point exactly to that, as he states analysis are not set in stone and could change at any moment. In his example, if someone were to place Bitcoin in a fund and sell interest, that particular product would then be considered a security. These are his tweets. First one he said about Ripple, he said, only one implementation, and the only use case is there to facilitate transactions that are driven from Ripple's banking software. Ripple Inc. owns a vast majority of tokens and likes to sell them on the open market. Bingo, Ripple is almost certainly a security. Couple issues with that. I'm not going to go into it because that can literally lead to an entirely different video. I think the Ripple team, like I've said many times before, they've met with the SEC, so they know, I'm sure they've been told, hey, in January, you guys are running a security. So they've been looking slowly to kind of get away from this. He said in his 15th tweet, he said, EOS only has one implementation. Block 1 owns 10% of the tokens. Block 1 clearly did not launch the chain. If I were Block 1, I'd encourage the community to build another EOS implementation. This combined with the fact that Block 1 clearly are independent businesses could make EOS a utility quickly. A lot of people, I saw you in the comment section, were stating that EOS was a scam because if you noted on their ICO page, for those who took part in the ICO, I read through it and it said, this ERC20 token has no value. You have no stake in the community. You have no stake on our blockchain. This token is absolutely worthless. Make sure you know this when you buy the token. And a lot of people, I didn't respond back because sometimes it's just draining to kind of answer every single question that every person has. This is why they did it. When you create something and then say that it is worthless, say that any profits that Block 1 makes, you have no share in it, that means you are not selling a security. When the EOS blockchain was starting to launch and they had the block candidates building the blockchain, people were saying, Why isn't Block One helping them? Why isn't Block One doing this? Because they know that if they made the coins, continued building the project, they needed the entire world or the community to come together as a whole, separate entities, 21 of them, to start building a chain. And when they did this, it was completely decentralized because it wasn't Block One who was doing this. I tried to maybe tell a couple of you, my fingers get tired of typing back responses. This is why we say, do your own research, and the answers are out there. A lot of people were just trying to spread misinformation about EOS. I was completely undeterred. Continuing on, Samani believes that given the SEC's guidelines, the number of implementations by independent teams is one valid metric which could be used to determine if an asset is truly decentralized. Following his logic, apart from Bitcoin and Ethereum, Litecoin, Bitcoin Cash, and Ethereum Classic, these may be the only digital assets in the clear, and this could be why Coinbase has only added these coins. He said that now, as it stands, XRP, Tron, Stellar, Cardano, and IOTA are almost certainly securities, while EOS may be a security, but could quickly become a utility token if the community pursues certain measures in the near future. I don't think EOS is a security at all. Them owning 10% of their tokens, this has been well known. There are other projects, I'm not going to name them. A lot of people like to reference the fact that Ripple controls or owns, they actually own 55% of the tokens. There are a lot of other projects that own 90%. Some of them own 70%. Like I said, I'm not going to say any names in this video. XRP more or less has a face. Tron definitely has a face. Stellar's not, they kind of have a face. The Cardano and the IOTA team definitely have a face. Like I said, a lot of misinformation. If you are a security, there's nothing wrong. There are a lot of people in finance who actually believe if you are considered a token, it may not be detrimental at all because you are then classified as something. Like I said, if you plan on dumping hundreds of millions of dollars into the market, you want to know when you take your money out of the market, where you stand in the tax bracket. And if you are a security and they've dealt with stocks and bonds before, mutual funds, and they know exactly what a security is, they could potentially be more likely to deal with your coin because they know exactly what it is and how to kind of deal with it. So there's actually even the notes from the SEC guy. He said that he actually thinks, he thinks all cryptocurrencies are ICOs. I don't think any of these things are ICOs. All of these are securities. I don't think any coin is a security. I think these are built by people, and typically, like I said, as humans, we need a face to things that we are buying so we can feel more comfortable with them. This is what took Bitcoin a long time for people to kind of be okay with it. This is why Andreas Antonopoulos is the face of Bitcoin, whether you want to believe it or not. Humans need some type of face. This is why Roger Ver is the face of Bitcoin Cash. Humans need a human face to know exactly what they're investing into so that they, feel more comfortable. Not to spend an awful amount of time on this. I apologize if I was talking too slow. I am very drained. It's just been a very warm day here. Not that you guys needed to know that. I do not like the heat, so I was very drained. I thought it would be a bit easier if I just spoke at a more human pace just to not completely wear myself out. I'm not out of breath like I normally am, which is pretty good. Thank you guys once again for watching. Thank you guys for listening if that's how you absorb your information. Thank you for all the support. I hope you guys have a great day, morning, afternoon, evening. Hope you guys have a great weekend, as it is the weekend right now. Thank you once again for everything, and I will talk to you all soon. See you.